computer. All right, so now that we have all this set up, guys, let me hide today's volume profile. So we have these volume profiles that we're gonna set up right here. I'm gonna set this one up right here. Set this one right here. Why is this not showing the value area high? So give me 1 second. Why is this not showing the value area high? That's strange. Oh, this is the value area high. I'm sorry. This is the value area high, value area low, point of control. I was a bit confused. Okay. So guys, today, this morning, I sent a message that I was not trusting this move up very well. Basically, what I was looking at was this very, very thin, basically, volume profile as we were moving up. You know, we spent a little bit of time here. I think this was like 30 minutes after open. Yeah, about 30 minutes. And then we had a massive move to the upside, like 30-point move, 40-point move to the upside from, you know, this point here. So basically, and usually I like to wait like 1 hour or hour and a half after open to even, you know, take a trade, because a lot of us know that the open can be pretty volatile. I mean, if you look at this here, if you grab calls, you know, somewhere around here, you would have gotten chopped and they wouldn't have not paid anything back until, you know, this move up. So this is, you know, the basically initial balance of the cash session or New York session. And this was 1 hour after open right here. Right here. So let's mark that right there. So this was 1 hour after open. Okay. So now we are trying to compare this volume profile to this volume profile. If you compare the volume profile here on the first hour, hour and a half, I mean, you really can't see anything very significant if you compare it to this over here, or this over here, or even to this over here, or this over here. First, you had, you know, massive volume profiles here. Then here you had, you know, very small volume profiles. And then here you had like almost nothing. So this was this is why I was very hesitant to try and, you know, play a move to the upside. I wasn't really liking the price action going up after, you know, this massive move here that had basically no pullbacks. And then here you had a lot of chop moving up. You know, you had a pullback here. You know, buyers try to take it up again, and then, you know, they failed, and, you know, we sold off. Okay. And what I saw here was we had some really, really good momentum on this move down here. Okay. And let me show you one thing that I saw. Okay. So we had really good momentum here, guys. And after this move down, we made a high volume node. So from our previous videos, what does a high volume node tell us? Can somebody tell me? Can someone tell me what does this high volume node mean right here? Okay, so basically what this is telling us is that there is a lot of interest. Yes, correct, Steve. There's a lot of trading going on here, okay? So if we compare this right here to this here, what's the difference between here, 0.1, and here, 0.2? Can anybody tell me what's the difference there? Correct. This is basically a market rejection right here. Correct, correct. Very good. So first, we had price acceptance over here. Then this is a market rejection right here. Then here, we had price acceptance, but price action broke below. So what's this mean? So price action was being accepted over here. There was value found over here, but then we moved to the downside. So this means that sellers found value here in this whole area. Now, let me show you something really cool, guys. Now, I was actually looking to short over here, but I didn't feel very comfortable today. Let me show you this really quick. I need to delete all these lines here. Delete this, delete this, delete this. Okay. Okay, so this is price acceptance and then price action showing us the breakdown. If you guys remember, I entered 4,400 short and had a stop at 43.05 approximately. So there. That was my entry and this was my stop loss. Okay, guys, very important. We saw that we formed the high volume node here. So to me, this was the basically whole area of major trading going on for the session. This whole area acted as resistance. Do you guys see that? So I saw this massive candle here. I was like, you know what? Momentum is pretty good. Massive candle, good volume. You know, it's building up volume right here. It's looking pretty good. Okay, I entered short here with a very tight stop around above this wick here. Why? And I've told you guys this before. If we see chop on a move down, if we see, you know, some wicks forming on a move down, that's potential, you know, loss of momentum. So that's why you often see me having very tight stops, but whenever the plays do play out, we get some really nice returns, guys. So like last week we got like 2 or 3 times 10, 12, 15 point moves. So it's very important that we utilize these volume profiles to find our entries and our exits. Rejection was a Friday price acceptance and money liquidity built over the weekend. Yeah, that's very possible, Chris. I mean, we don't know if, you know, liquidity built or not until, you know, it happens. I mean, this move was pretty good, but, you know, they had to come up and grab more, I guess, and then, you know, flush it. And I told the team that, you know, after this entry short, my price target was 43.90 and potentially 43.80. But I told the team that I was going to be expecting a pretty overextended move down here. So I guess I should have waited for this move over here, you know, a little bit more up here. I know some of you like using supply and demand. This would have been a really good, you know, a really good supply zone for today's session. So you can see how, you know, I entered short over here, got stopped here, basically on the same 5-minute candles, whatever. I got stopped out right here at this point on this candle. And you know, it was okay. It was okay, you know, because pretty much stopped here for like what, 1 hour or more. You know, this candle went in pretty good profits, or actually only like 2 points, 4 points approximately, 2-3 points. But then after this candle, we had a 12, 11 point move to the upside. So, you know, if I'm entering short over here, this move would have been pretty bad for my short entry. And, you know, it's okay to get stopped out, you know, get stopped out, reassess price action and see what happens next. But you can see how, let me delete this. You can see how this volume profile here, this high volume node acted as resistance for the session, and how this low volume, this high volume node down here acted as resistance, as support. Now, guys, very important. Since we're coming from the upside down to this area, this is price acceptance for the buyers. This is price acceptance for the sellers. Does that make sense? So price acceptance for the sellers, price acceptance for the buyers. Because we did not break above this level. This is price acceptance for sellers until we break, retest, and then, you know, try to move up again. And this is price acceptance for buyers. Why? We built a base here at the open, okay? We tested these highs, and this rejection came in here in this area, which is this high volume node right here, and got bought up. So this was price acceptance for buyers. Does that make sense? So, and remember, guys, it's very important that we use the volume profiles to understand value in the market. This down here is value for buyers. This up here is value for sellers. It's very important that we understand that. Any questions so far? Of course, you know, we have to understand price action before, you know, entering a trade. And, you know, like down here, it would have been almost impossible to catch this move to the downside. I mean, literally happened just one touch and boom, like this candle right here. Like this is the 2-minute time frame. But when you see price doing this, struggling to break to the upside, struggling, you know, you can tell that there's a potential move to the downside coming. And look, let me show you guys. So do you see how the moves up here are pretty, you know, not, you know, very good. They're pretty slow. I mean, you get a good few candles down here, and then it gets very, very slow. You know, you get this massive push down, you know, a bounce, really nice bounce, slow, you know, picked up momentum again, slowed down, touched the resistance again, then had it was an okay move down. It was not choppy, it was just moving down very, very slow. Then up again, very slow. And you can see how momentum picks up here, chop, 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 moves up again. And then, this was the, what's it called? Algo time. But you can see how the moves down are a little bit more violent than the moves up. Now, of course, let me draw this. So down here, we don't see much of a volume profile. So there's no way to tell if price will bounce or not from here. I mean, we can see that there's an intraday support here, but we don't know if it's, a strong support or not because we don't have any significant trading going on here. So this could be just, sellers accumulating, or it could be, a potential buyer accumulation in this whole area. We won't know until we break out of this little range that we're making. But what we do know is that we have a lot of trading going on up here. And we need to focus on what we can see and what we know based on what the volume profiles tell us and not what they're not showing us. So if they're not showing us value being traded here, there's a high possibility that, trading longs from this area could be potentially, risky. Yes, we did get a few good bounces from this whole area right here, but it just doesn't guarantee that we're going to have always a move up. What if we, saw this move, boom, up, came back down, and then we enter along here and then get ran over right here? That's the problem with these small areas where we have very little trading going on. Price hit 44. Let me just read through the question, guys. Give me 1 second. Beginning to wonder if swinging calls and SPY bounce would be appropriate. Honestly, I think it could be very difficult to, predict the next few days moves due to, bank earnings. Also have Tesla, and data has made the market very, very volatile. So, you're playing against data almost every week. So when price hit that 44.10 zone the second time, what tells you or what reassures you that it will come back down other than the volume profile? So let me show you really quick. So look at what's happening here. Look at what happened from here to here. So as we went up, and let me mark the old volume profile. Let me mark this right here. So this is the old volume profile. And as the session passes, we develop a higher node. And not only that, but we develop a bigger node right here. So there's a lot of trading going on in this whole area right here. Now, so what tells us there could be a potential rejection? Price action itself here tells us. Why? You can see how here on the 5-minute, we have big momentum and then this sudden loss in momentum. And if you like to trade like the 2-minute, 1-minute timeframes, you can see it on those timeframes as well. You can see how on the 2-minute, we lose a lot of momentum here, moving to the upside. Do you guys see that? So we lose momentum going near this previous rejection area. And that's why it's very important to, understand momentum. And of course, if we look at something like, where is this? We look at something like Apple or RTY. Okay, where is I think it was RTY that reached. Let's see. Yeah, it should be RTY. Let me activate the volume profile on this. You can see here on RTY. Let me use the 5-minute instead so we can see a little bit better. And this is all part of momentum trading, guys. You can see here on RTY how we previously made a low volume node right here, and we had a rejection right here. Okay, so this looks pretty good here. We had chop here, breakthrough, try to move up, reject, try to move up again, reject. So this is a pretty good zone right here. You can see how it lines up over here with a today's session value area high. So look at RTY up here. RTY touched a significant level of resistance that was one support. This was support for a bit right over here. Here it was resistance, then turned support. I mean, we basically moved up like it was nothing. We had those few days of rally over here, right? So we had resistance here, and then we broke it with massive momentum. We never retested this again until over here. You can see how we have a low volume node form right here. We could actually make it a little bit bigger, like right there. Low volume node, which is telling us, price is being rejected. Then it moves down past it, moves back up, tests this, low volume node, and then moves down. Over here, RTY, and this is what I told you guys a few hours earlier, that RTY was, looking a bit weird, and it was starting to sell off. And when RTY started to sell off, we had this, massive move. It was, what, 20 points, 30 points in 10 minutes? It was just very, very fast. So, it's very important to analyze other sectors of the market and not just SPY or SPX. SIG. Give me 1 second. I'm just catching up with everybody's questions. Let's see. TradingView is free access, but the volume profiles, I believe you only have access to them with the Pro, what is it called? The Pro Plus, I think. I've been trading for 3 to 4 years, I think. I'm not quite sure. This indicator adjusts as the session passes. So let me show you really quick. So you see how here, look, you see how here it has just this here, this high volume node, but as time passes, it'll change a little bit more. And as time passes a little bit more, it'll keep changing. Like, do you see that? So this basically automatically changes as time passes, but you have to use this indicator here. Okay, guys, so now I'm going to show you why I was targeting 43.90. I need to go back. There we go. So, oh, well, well, the plan did not work out since we had, this liquidity sweep to the upside. We were basically right here. And I was targeting 43.90 because of this over here. Do you guys see how we had a low volume node over here? We had no high volume node. Then we started forming a high volume node here. If we compare this to this, we had a lot more trading going on here. Okay. And we had this massive, really crazy volatility here. So we had crazy volatility here. And then here we just swept through, all this trading here. And we made a low volume node here. This whole thing was a low volume node. And we only had this as high volume node. So I was targeting, this area here because of this high volume node. I'm sure you guys have heard of trading from zone to zone. And this is basically what it is as well. Basically trading from zone to zone, trading from profile to profile, or from buyer value to seller value. Does that make sense? You're trading from one area of value from another area of value. So it's basically we were planning to trade from seller's area of value to buyer's area of value, which is from basically supply to demand. Does that make sense? And this is how I find my levels, how I try to find my precise entries and exits, because I use the high volume nodes, low volume nodes to set my stop losses, my entries, my price targets, everything. And if you go look at previous videos, you'll see why I like to use the volume profiles to find, price targets near point of control or near value area highs or lows. And trading psychology comes into this system as well with the volume profiles. Basically, the psychology behind the profiles is that they're giving you everything right here. I mean, this is literally a puzzle that the market's giving you, but that's already solved. You don't have to do much of the solving. You just have to look at the puzzle and basically just look at the pictures. That's all you have to do. Look at the pictures that the market's giving you and try to analyze and understand those pictures. If you see, if you see price do this tomorrow, oh, sorry. Do you see price do this? It's not drawing. You see price break up, come down, and start chopping here, and you see a high volume node form, and then you see that this is the low volume node. And if you see price do this, you might want to take some longs here and play the upside. Now, if you see a high volume node form here, and you see price go back under and do this, you might want to try some shorts because there is sellers acceptance on the downside. And if you see the move to the upside, it's showing you that there is buyer's acceptance. And that's, very simple trading psychology when it comes to volume profiles. You don't have to do a lot of what if and stuff like that, because the what if is only up or down? What if we move up? What if we move down? If the volume profile confirms a move up or a move down or a rejection, you basically remove a lot of the guessing and all that crap that a lot of other indicators bring into the table. Does that make sense? Any questions? And let me go over this trade that we took on, was it on Thursday? Yeah. Do you guys remember that trade? Oh, you so Bumblebee. You sent that as a direct message, not for everyone. Do you trade full time? Yeah, I trade full time and I'm a full-time farmer as well. So guys, you guys remember Thursday, that short that we took? I think the ES contracts went in like $1,500 in profits. They went in a lot more. But I took most of my profits, I think, somewhere actually trimmed here and took one more right here. And then it still went all the way down to 43.50, 60. Oh, oh, Jay, bro, you're here. I didn't see you there, brother. But yeah, guys, on Thursday, guys, very important on Thursday. Good to see you, brother. Guys, on Thursday, all I used was this here. This right here. I only drew one level of supply. Okay, what did we have here, guys? Okay, on this volume profile here, actually, let me hide this. Okay, so we have volume profile here, one here, and one here. So basically what I was looking at, it was this right here. On Tuesday, I'm sorry, we had a high volume node here form with price acceptance. So this was seller's acceptance. Here, we didn't even go near it. We didn't make a high volume node, which is pretty much flat here. And we only touched it during the algo time. So we touched this area during algo. Market open, rejected, moved up, reject, moved up, reject, moved up again in this area. We had a previous rejection here, a high volume node that showed us, a lot of interest from the sellers. Now, as we're approaching this area again, we see a low volume node, right? Since the move is coming from the downside, and we see no basically high volume node, there's little trading going on here. So I see little trading, then I see chop. Okay, then I come back here and I see, okay, price was accepted by the sellers here. So there's a high possibility that sellers re-enter this area again. We didn't make any high volume nodes, meaning there was not a lot of trading going on here. Buyers were not interested in this area. And it showed it in the price action as well. Significant trading, massive rejection, like instant rejection. We're here, very little trading, started chopping, and then massive move down. And I know it can be a little bit confusing sometimes, guys, but if we compare, you know, this high volume node to this here, this is basically the average trading that we'll have for the session. So this high volume node here is pretty significant compared to this here, because it's pretty small so far. I know this one looks pretty small compared to this, but if you compare it to this is, kind of the average high volume node. And as time passes, we'll probably see this, change. So we see this, it changed a little bit more within these, 10, 5, 15 more minutes that we moved it over here. And you'll see how it just keeps changing. And then we move this over here. Basically same thing happened over here. Reject that here. Here didn't touch, I guess. But it was pretty close to this whole area right here. So this is why I was not expecting a significant move up, even though we had a liquidity sweep to retest this high. But you can see how we had some pretty nasty rejections from this area. It's all from looking at, the volume profile. And this is where we got like, well, I paper handed these, but these went like $3,000 per contract or $2,500. I think we entered short somewhere around here. I took my first trim here and took my final one down here. But it just kept going. It went another 20, 30 points. And it's not rocket science, guys, It really comes to this and looking at other not other indicators, I'm sorry. Other tickers to see if momentum is looking pretty good or is it looking pretty bad for the upside or downside. So Steve, the problem with this is that you don't want to just know or take entries from this. And this is why I rarely draw supply and demand lines. You want to more understand the price action around the lines, not necessarily the lines themselves. I think the lines themselves are just to see if value is similar to previous days. Like if we compare, let me delete the drawings. If we compare this session to this session to this session to this session, they pretty much all had the same resistance and the same support. See, this was support, this was broken down, this was resistance, then support, then turns support, and then it just broke down again. So I use these lines to understand where value is being held, and then I look at the price action around these lines. Does that make sense? Yes, correct. The lines are more of an area that you want to take a look at, not necessarily the line itself. You want to understand the price action around the lines. Any other questions? Questions, comments, concerns before we wrap it up? Usually when you have low volume nodes, you'll just see price run through it, like right here. You can see how price just ran through it, and even ran through a high volume node here. I think this high volume node formed after this. But you can use the what's it called? The high volume nodes and the low volume nodes as price acceptance or rejection. Usually, I'm sorry, I was looking at my phone. Usually, price tends to just run past through these low volume nodes. Like we saw it happen today. Let me hide this. So you can see how this whole area was a, let me move a little bit more. So you can see how this whole area was a low volume node, this whole white area, and price just, knifed through it. And it didn't like make a reaction in price action or a bounce until we touched the high volume node right here. Do you see that? Yeah, it's kind of like a gap, but price tends to just flush through it. It's a gap in the amount of trading happening. Any other questions? So if we don't have any other questions, I guess we're gonna call it a day, guys. J bro, so you mean these highs over here? You mean these highs? So, oh, let me delete that. So on tomorrow's session, we have, I think, retail sales. I want to see if we, hold on, let me see. Okay, there it is. So I want to see a high volume node form somewhere up here. I would prefer to see the high volume node form right here, move up, come to retest, then try to take longs here to play for an upside move to like 44.50. If we don't make a high volume node and we just do this, I'm going to be looking to enter short somewhere around here and target these lows right here. Yeah, so we need to wait to see what happens tomorrow with theta. We have, like I said, we have bank earnings, we have Tesla earnings, and we have retail sales tomorrow. So let's see what happens after that. But yeah, I usually wait a little bit, but with theta tomorrow, I'll have to see. I have to see with theta tomorrow. Sometimes we'll get some really nice setups at the open, if there's enough trading going on. But I need to see what the volume profile show tomorrow. No, I don't use after hours for this indicator. You can use the market session or cash session to trade after hours, but the volume is very low after hours, so I really don't like trading or using the volume profile unless I see significant, trading going on pre-market. Any other questions? Okay, awesome, awesome. So I'm gonna start recording this. Start